Hey, everybody. Welcome back to The Smattering. I'm Jason Hall, and I'm joined by Jeff Santoro. Jeff, let's talk about Walgreens Boots Alliance. What do you say?
That sounds good, man. It's an interesting company. I'm happy to talk about it.
Before we do, though, just a thank you to the Motley Fool. We have a great partnership with the Fool. If you like what we're doing, you're excited about finding great stock ideas, go to our link, fool.com/The Smattering. Put in some information, and you're going to get the Fool's best 10 stocks to buy right now. So check that out, and thank you. Jeff, you want me to tell you about Walgreens, why I'm so excited about this company and why I think it's really worth taking a close look?
I do, because as we were chatting about what to make a video talking about, I was really interested and surprised that you picked Walgreens. So I'm dying to hear why it's on your radar. Right.
So on the surface, we're talking about, so what is Walgreens? We know of it as the retail pharmacy outlet, right? There's thousands of Walgreens on corners all throughout the U.S. But we also know that there's threats and risks to the business, right? So we've seen Amazon's moving into pharmacy. Everybody else, Walmart's a big pharmacy player. CVS has done a lot of things. CVS has gotten into like the insurance side of things. And so there's stocks down 39% from the high over the past year. So almost double the S&P over that period. And Jeff, I'll be honest with you, I think the market is sleeping on a wonderful opportunity. So let's start with like the longer term history of the business, right? So one thing, this is a dividend aristocrat. It has increased its dividend every year for decades, literal decades at this point. It's conservatively managed. I'm a big fan of Roz Brewer, who is its CEO. Roz Brewer was an executive, and she was on the board and an executive at Starbucks before coming to Walgreens a couple of years ago. So I think they have a leader in place that understands technology, that understands retailing, that also thinks about the bigger picture for a business like Walgreens. And one of the things they're doing, I want to share a chart from a slide from their most recent earnings presentation. And this is something Walgreens is doing to kind of reposition itself. And I think it's really, really important. So they're taking their core business, that core retail business, they're partnering with other operators in the healthcare industry to start making healthcare a direct part of their business. So this is something CVS has kind of led the way in. They're looking to do the same thing to start getting access to care, low-cost care in their physical locations. They've already started rolling this out. They have over 100 locations, and by the end of the year, they're expecting to have a couple hundred of these. Whether it's things like being able to do clinical trials with some partners with Walgreens Health, or it's going to get care, kind of that in-between urgent care and your primary physician, right in that sweet spot where there's a lot of opportunity to drive cost out and to increase access. And this is something the company is working really hard to do, Jeff. If we take a look at, again, the stock's down substantially, I want to just talk a little bit about valuation here. Because, again, this is a company that's stable, right, that makes money, that is profitable, and it's trading for an absolute bargain right now. It's trading for barely over 5 times earnings. Even if we want to look beyond earnings and think about using dividend yield as a proxy for valuation, the dividend yield now is almost 6%. Because again, this is a company that's been able to steadily increase that payout. So this isn't a company that I think is at any risk of having to cut the payout. But the dividend's up as much as anything because the modest increases in the dividend, but also because the stock price has fallen so very much. This is a long-term winner. I think if we look at this company and think about over its history, we're talking, as a public company, 37,000% in returns. It's been a laggard more recently, but I think the market has completely swung the pendulum way too far the other direction. Looking forward, it's stable. They have some real strong growth initiatives. Investors, whether you're looking for stable income you can depend on, dividend growth, or just a bargain, that once the market figures out how good of a company this is going to increase in value, I think this is a winner.